Hello everyone, welcome to the market update. My name is K Kim. Today is September 23rd, 2016. Actually, market is still open as I put this video or record this video for you guys for tonight's update. So market should be open for another hour and a half here by the time I'm done with this and put it on YouTube and tweet it out. Should be close to the closing time. But today I actually want to start the video with Twitter. Twitter is currently up 20%. As you can see here, there was news that came out. This is USA Today, came out just about 2 hours ago or so. Basically, the headline reads, Twitter shares surge on report of Google Salesforce talks. Basically, these guys are thinking about, getting a bid or making a bid to acquire this company, this so-called struggling social network. So obviously, Twitter have been receiving expressions of interest from a number of technology companies about whether to make a bid to acquire the company. But obviously, the big boys like Salesforce and the Google is a talk to possibly acquire this company. And with that, okay, they really gotta stop playing videos without my consent. That's why I hate going into these websites. They just all of a sudden pops and then just play stupid videos in media. So let's just because of that, let's get out of this this website and then let's just look at the charts here, which is more important anyway. So obviously with that talk, Google and Salesforce possibly acquiring Twitter, there's a lot of optimism here, and through traders and investors, you can see the huge pop here. And that's a good sign, though. In the minor term, we have good cultivation of a minor term uptrend here, and there's a good chance. I think next resistance we can see in technical perspective, your overhead supply here at 24.55, 26.36. This vicinity is very, very important level. I think, if you're really for this, shorter term and, trade this for, maybe up here, I think there's a good chance we'll get up there. We got a huge volume today, the surge of volume. A lot of people are talking about Twitter. A lot of people are getting emotionally sucked into this move here because who knows if it's going to be kind of a pump and dump kind of deal. But looking at a big picture, and if you want to buy this for long-term investment, you want to hold things for a couple years or maybe 5 to 10 years, I personally think there will be a better day to invest on Twitter than today. Looking at the big picture here, you can see there's this huge downtrend resistance that's still ahead. This is a danger level there. And obviously, how many people do you think that Twitter has bottomed here as it started going up? Well, I'm sure there are a lot of people kind of got suckered into this move thinking that was a bottom, that Twitter is ready to skyrocket just like the Facebook has done. Well, that didn't play out. This was back in October 2014. We saw another move down. And how many people do you think that was looking at this downtrend line and thought, hey, there's a huge gap up here, very similar to a gap up we see today. That must be a huge gap up. And because there's a huge gap up, hey, Twitter has bottomed. We cleared this resistance level, so it must be so. And this thing continues higher. People are chanting to the moon. And then we tank yet again, and then the Twitter establishes brand new primary term downtrend resistance level. See, so ever since then, this thing just tanked, just really struggled, and as you can see, this thing came down and down and down and down, and we finally seeing some pop here. What I'm getting at is this: just because we got this news there's a possible scenario that these guys going to, acquire. Just because these bigger companies acquire Twitter doesn't mean Twitter is going to just skyrocket. And from that point on, you guys remember Nokia. In 2014, Microsoft acquired. Here, let me just go to chart real quick. And again, they're a different company. I get it, but the perspective is similar here. The sentiment is similar. This was 2014 right here, and obviously this was hugely broken, bearish trend chart that we're looking at here. This was 2013 right here. The Microsoft acquisition of Nokia right here, a huge gap up. And we saw a pretty good move since then. After that move in 2013, you can see then we got up here. And then we met with this gap fill resistance right here. This is why technical perspective is very important, so you understand these levels. Because why do you think it stopped here and started pulling back? This was the gap fill resistance. And then it looked like it finally breaking out of this gap fill resistance and ready to go to the moon. Well, then, ever since then, we met with this downtrend resistance, and this thing tanked, and been struggling ever since, right? So again, obviously that was a desperational move from Nokia and Microsoft, and Microsoft just pretty much wasted about $8 billion on the acquisition. And I have to say, obviously Twitter with more of a social media aspect, not so much with the Nokia, the failing company, but Twitter, there's a lot of optimism that Twitter can be next Facebook, but that's just conjecture. That's just opinions and speculations as of today. Only price can tell us the truth. And as of right now, as we can see, again, looking at a big picture, I don't think this is a buy here for longer term traders or investors. You want to trade this to possibly getting into next resistance levels. I think I see somewhere about here, 25-30-ish level. I think then there's a good chance with today's move, with a gap up here, we clear above this recent high from August 12th right here. So I think that's a good sign in the minor term for sure. But is it a buy? Is it a buy for long-term investment? Personally, I wouldn't at this point, but I think there's a good chance they will get up here. Again, like I gave you guys a quick scenario, there are people calling market bottoms here and here. Even we saw a huge gap up here. Huge gap up here. And we are seeing pretty big gap up today. But right now, when we look at things, a big picture, this chart is still bearish. We're still dealing with major primary term downtrend here. So when should we buy Twitter? Maybe that's for another video, but I think at least I would like to see getting back up to some of these levels. 34.45, pull back. It's not too late until it starts to get into more of a major primary term reversal. This right here, this isn't a major primary term reversal. That might be kind of a minor to intermediate term. And when I say minor term, looking at a major term, more of a shorter term kind of a reversal type of deal. Something like we've seen here, something like we've seen there. So that's kind of what we're seeing here. Very, very similar to 2014, kind of a bottoming pattern. But that bottoming pattern did not last. It lasted just for 4 or 5 months before coming back down. This bottoming pattern back in late 2014 did not last. It lasted for about 4 or 5 months and it tanked. So this bottoming pattern there's a potentially could last for a couple months or so. But we all know that uptrend, before the major primary term uptrend gets developed, it takes time. So I think a prudent investor, a prudent buyers will not buy at this point unless they are short term and just gonna take advantage of this hyper active trading session we're seeing today. And that could possibly get us to about 26.35, possibly even 31.24, but to watch this major primary term resistance. Does that make sense looking at the chart and its patterns here? So, again, I just think that there's, Twitter has these type of attentions before. Historically, here and here and here, it just was not the major bottoming signals. They were a short-term, intermediate term rather, bottoming signals, and that was it all. And I think, as of today, if we see follow through and some healthy transactions among buyers and sellers to cultivate the price action with the primary term higher lows and higher highs, then I think there's a good chance that Twitter possibly has bottomed, major bottom, not just short term but major bottom. So right now, as of today, I wouldn't buy this for long term. Anything short term might be better, but continue to watch this ticker name here, and I will write an article when I do see a signal that it has bottomed. But right now, I don't believe that it has bottomed in the primary term. Possibly it has bottomed, and we have good cultivation that in a short term, in a intermediate term, that it could get up to some of these levels. Hope that makes sense for you guys. Let's go ahead and look at the market here. Look at the S&P 500 index and continue on with the market update. Since last market update I've done, we talked about the scenario that we want to see the price getting above this 10 and 20 MA and what to look for. Remember? Go back to my video and kind of listen, and we talked about how these moving averages is what you want to see. Obviously, just to do a quick recap, the 10-20 MA, 10 MA has been stressing out the buyers here last this week and last week, and we're staying below that level even on this day. Remember September 12th, we had a huge move, and then obviously you can see that 10 MA has continued pressure and brought this thing down for about 1, 2, 3, 4, 5, 6 trading days. So we talked about how if we want to see the price action getting above these 10-20 MA, which we did on Wednesday, right? That was a Fed meeting day. We had surge of buying activities. We got up and we closed above 10 and 20 MA. That was a bullish signal on the minor term. We saw a gap up, right? And the reason, the past article that I wrote, 4 important levels to watch on the S&P 500, talked about how 2180 level is going to be important gap resistance level, and precisely that's where we went to yesterday. We got up here 2180, we fell a little bit. There's some sellers here yesterday early in the morning, and then today we closed yesterday here at 2177. We gapped down today at 2173, we're coming down. So what we talked about was you want the price action to go up, hit this resistance, and pull back. And in that process, and this is, we're just recapping my last video here. In that process, you want to see these 10 and 20 MA kind of rising back up here, and how the price action would kind of use these as surfing it back up. That's kind of what we want to see going into next week, and that's what you could possibly expect going into next week. 2160, actually 2160-ish level is going to be important level to watch on the S&P 500 index. going next week. We actually precisely came down today, but should the price continue lower next week, 2162 is the level to watch. In that process, we may even form some kind of a bull flagging pattern here. We get up, we come down, bull flag, and continue higher. Remember we talked about here, this is what we, this is potential bull flag pattern. We go up, we kind of move sideways for 3 days below the 10 EMA, and we saw that breakout to the upside, and now there's potentially another continuation pattern forming above 2162. Just in case, if this thing does get below 2160, make sure to watch that 20 EMA and 10 EMA next potential support there. Some of those levels probably will provide a strong support going into next week should the price get below the 2160. But I do think 2160 could act as support here. At least we'll see some slowdown on Monday or Tuesday. And then if we see a good bounce in that vicinity, then you could see that as like a bull flag pattern here that could possibly gap back up to 2180. Remember, 2180 level, we do have kind of a falling resistance here. So we might get up here. We kind of struggle a little bit, and then see how it plays out there. And that's probably going to be for next video update. But if this thing breaks off finally above 2180, then I could say that this thing is ready to make new all-time high and continue higher. But for the time being, as of today, I think this is a constructive in the market. That's what the market does. It goes up, it breaks above the 1020 EMA. Do you remember this was back in late June? This was a Brexit panic. We broke below 1020 EMA, and then very fast we got back up. We closed above 1020 EMA here in that vicinity back in June 30th, and we even saw another day of follow through. But what did it do? We came down, retested the 10 and 20 EMA. In that process, we formed that bull flagging pattern. And then market widen back up, you see. So kind of a similar scenario here, looking at more of a minor term perspective. Gap down, came down, got up, pretty fast last couple of days. You can see that right there. We closed above 1020 MA, and then we're pulling back, and these 1020 MAs ready to get back up. Possibly we continue lower and then hit these levels, and then continue to move to the upside. Again, best way to get in touch with me is go to my blog at twotradersclub.com, and you can see there's a notification box here, and you can put your email address here, and you can get a video like this or my article. Obviously the videos, if it's an article, you will not get it on YouTube. So if you don't want to miss my articles, videos, everything I post, new videos, new articles, you make sure to get that notification on your email inbox. That way you will not miss any of my posts. Have a great weekend. Until next market update, enjoy your weekend, and I will see you next time. Talk to you next time.